Hello and welcome to this week's episode of The Capitalist Investor. As always, you have me, Diamond Hands D, and this week, just Luke Lloyd. Cool hand, Luke. What's going on, bud?
Just Luke Lloyd.
Yep, just.
Tony's on assignment.
Yep.
Jet setting, like you were for a couple of weeks, 2 weeks,
yeah.
A week and a half.
Mm-hmm.
In Hawaii. How was Hawaii?
Oh, it was amazing. It really was. Yep, so wasn't really
That's
on
all you have to
assignment.
say? Just, it was amazing. It was
It
great.
Was, yeah, it's spectacular. So there's we went to Maui, and there's just tons to do on that island, and then we went to Kauai. So that's like, if you see a lot of the overhead shots for Jurassic Park, a lot of them were on Kauai.
That's cool.
Yeah. So
What was the best part? The food, the scenery, the relaxation, the drinks. You don't drink?
I would say probably not the relaxation for a family vacation. But yeah, it was. I played a couple rounds of golf, so that was pretty fun.
Of course, it comes back to the damn golf.
Yep,
Of course.
So
Family vacation and
ocean
golf is
views.
the best.
Yep.
Love it. Today we got some crazy things going on with the DNC and what Kamala Harris within the DNC and within the Democratic Party is announcing from a tax policy standpoint. Pretty wild out there on the streets.
Yeah, I would say.
What was the biggest thing you stood out to you? So, I mean, let's go through like the top 3 or 4 things that she came out with. Like, I know one of them was like the crazy scenario, which I'm sure we're going to hammer on today, about unrealized capital gains at like 25%.
Yep.
I mean, that's insane. That's one of them. Number 2 is like corporate tax going up to like 28%, was it?
Yep. Mm-hmm.
It's like a 33% rise from like the 21% that it's currently at. What else is in there?
She was talking about the price controls on food, which is just probably the worst thing that you could ever do.
Yeah. Full-on communism.
Yep. And yeah, the top capital gains bracket 44.6%.
So it raises up for like 5%. I think it's 39% is
Yep.
the top one now.
Mm-hmm.
Interesting. So let's pin pick at these. If this happens? Well, number 1, is it likely to happen? Number 2, if it does happen, some of these things, what's it actually going to do? So let's start with the unrealized. I think that's one of the biggest and one of the craziest in there. So just to kind of clarify what exactly that means, when you buy or sell a security or even a house, right? Let's say you buy a house for $250,000 and you sell it for $500,000. Well, you just had a $250,000 capital gains on a house. I think it's $500,000 is tax free. So I guess that wouldn't be a capital gain, but it still is a capital gain.
Right.
If you buy a house for $250,000 and you still own that house and it's worth $500,000, you technically have an unrealized gain of $250,000. So you're telling me homeowners that have capital gains are going to have to pay 25% tax on the appreciation of their houses. That's essentially what this unrealized thing is. Now the Democratic Party, just to clarify, is saying, oh, this is not going to be applied to the average person, middle-class America. This isn't even going to be applied to upper class, like the millionaire next door. They're saying it only applies to like the 9-figure like the centie millionaires are calling it, like the top 0.01%. Mm-hmm. But from my experience with the Democratic Party, they say they're not going to do one thing. They're saying they're only going to tax the rich, but
right.
They end up taxing everybody else. Mm-hmm. So I don't believe them.
That's the only way their policies can ever actually raise the money that they need for all their policies. Because when you do the math real quick, there's not enough rich people to tax at that rate to really make a difference. So that's how all of those tax policies always bleed down into the middle class. And the unrealized capital gains tax, I don't even know how that would even work. It's so the house is an easy example, but I'd say as it relates to kind of what we're doing here, a lot of our clients have non-qualified accounts, right? So not just the savings into like the 401k plans that gets rolled over eventually. A lot of my clients have big capital gains inside those non-qualified accounts because they've had, securities in there for a long time. Apple comes to mind. Got a lot of clients with a lot of legacy Apple position. So yeah, if you have $100,000 gain within your Apple stock and you're selling, you got a long-term tax strategy where you're selling that off a little bit every year to fund your retirement. Now all of a sudden that $100,000 in gain, you got to stroke a $25,000 check for gains you haven't even realized.
So are they gonna give me $25,000 check when I lose money?
Yeah, exactly. So if the next year that $100,000 is only worth 80, like, are you getting a giant refund now? So yeah, just procedurally how that would even work, the amount of extra accounting that would need to happen to do all that, the amount of errors that could be made, oversights, it's going to be tough to deal with, not to mention like currently. So let's say in that non-qualified account, you sell something, you're getting a receipt, that goes to the IRS essentially that says, hey, you sold this position and you had this amount of gains. How are you going to generate those for all of the unrealized capital gains? So it is a nightmare scenario to think about. And ultimately, what are we going to get for it? That's really
nothing.
That is really
inflation.
Kind of my argument with all of this. Like, regardless of what you believe, regardless of what you hear that's coming out of the DNC, who would want to give the government more money to do more stuff with? Because they're just going to waste it. It's what problem have they solved?
It would just disincentivize investing in general. You disincentivize capital markets to work efficiently.
Yep.
And if that's the case, the whole system fails. Mm-hmm. Like that. Just saying, if the 25% capital gains or unrealized capital gains tax happen across the board, let's just assume it's not to the centime millionaires, whatever it be. If it's across the board, that would be the end of capitalism, the free markets, and the end of America. I will go that far, because you cannot tax money that has not been made.
Right.
Truly not been made.
Mm-hmm. It's really stunning, honestly, that proposal could make it out into,
Well, you have a bunch of angry people. Mm-hmm. This is the problem with cycles. Ray Dalio, Changing World Order, great book. Like, problems with cycles, when you have capitalism produces a lot of wealth. Yeah, it produces wealth for everybody. It does. It produces wealth for the lower class, middle class, upper class. Even the lower class is not poor, truly. Compared to like 200 years ago, people were dying on the streets. Like the poor aren't poor anymore. All right. But that being said, there is a big wealth disparity. The rich have gotten extremely rich. I get that. There's been a big wealth disparity. So you have a bunch of people at the bottom now that see these multi-billionaires with their big yachts, they're living the best life, whatever it be, and they're very angry. Mm-hmm. So when you talk about 25% unrealized tax, gains tax on people that probably don't have much in investments, then yeah, of course they're going to support it. They have never experienced it.
Yep.
This is the part of the cycle we're in. It's just human behavior, things like that.
It really is. So hopefully things get a little bit more sane, because maybe we'll talk a little bit about it more next time.
Well, then you have the corporate tax. Let's hit on real quick. Corporate tax is 28%. I mean, that just would be passed on to the consumer, so you think more inflation, right? You have slow economic growth, which is in a time next couple of years, we might need economic growth to pull us out of recession, so that's just bad timing in that scenario. Price controls you already hit on probably will be passed on to the consumer in some sort of way, somehow. I mean, it's like you have the supply issues then at that point where it's like the gas. I think 1980s you had like gas lines, people getting gas because of price controls on gas, or you have shortages on food. Like that's even worst case scenario. Like you put on price controls, what's the incentive for businesses to operate? You could actually have like famine out there.
Yeah, price controls on food, government price controls on food. To keep up with the inflation that the government's creating is crazy town. Yeah. I don't know how else to say it. It's this government spending is literally the definition of why we're seeing so much inflation.
But like, I hate to go to extremes, but this is why government policy is important, because it could actually be a matter of life and death.
Yep. And honestly, we've never really seen such extreme positions taken before.
Yeah.
But yeah, I mean, but that's price controls on food. That is probably one of the most extreme positions that you have heard in your lifetime.
Yeah.
I'm talking to everyone out there. That is a wild thing to even put out
there.
But
why does the louder and crazier the left gets, the more energy it kind of feels like they gain? Why?
Yeah, it does certainly feel that way. And you can see it from the speeches at the DNC. It seems the crazier, the more excited everyone gets. That's for sure. Wild stuff.
We got hit on this on another topic. Talk about more about human behavior and cycles and why that might be happening. I think that's a good maybe ending point. If you have any questions about how this might impact you, let us know. More than happy to talk about individual situations, like, how you might want to plan around this stuff. I mean, I hope the optimist, which is not much usually in me, says that this will never happen. Even if they do get elected, hopefully there's some balance and power. Checks and balances on power.
Mm-hmm.
Hopefully this stuff never even happens, even if somehow she gets elected, which by the polls it's 50-50 right now, and by the betting odds 50-50, so it's a coin flip chance. But if you have any questions, always feel free to email us, let us know, call in 216-800-9000, and we will see you next time on The Capitalist Investor.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.